friends, we are releasing the auto sector earnings review post the results. We have at present around 15 companies under the tracking for under the Sharekhan universe, and we have around 8 companies which are under the coverage. So if you look at our universe which is under the coverage, the top line revenue growth for our sector is expected to has grown by around 20 odd %. But if you look at the operating level performance, it is pretty flat. On a bottom line, the growth is just 5%. So the first message which we are giving is that the top line pace has not kept with the bottom line growth. Bottom line at in a way of operating performance has been a laggard with just 5% growth. Now, if you look at operating margins, barring few companies, most have reported year-on-year decline in operating margins, and many of them had a high corresponding base also. But then for others, the raw material easing could not percolate into better margins. We have also observed that whenever raw material prices have eased, it has taken around 1.5 quarter or 1 or 2 quarters to really see that benefit going through. So in Q4 we didn't have much of the benefit, and we saw most of the companies reported decline in operating margins. Now if you look at the outlook issued by most companies, they are expecting around 5 to 10% growth for FY13, and most of the growth expectations are back-ended, which means that they are expecting H2 FY13 to be better than H1 FY13. So for the first half or the first 2 quarters, they are expecting a very flattish growth, maybe a 0%, and in some segments a decline on a year-on-year basis. So the hopes really are that the H2 FY13 will be better than H1 FY13. Primarily, the growth will coincide with the interest rate reversal as well as easing of inflationary pressures. Now, if you look at the outlook for the next 1 to 2 years, we think that amongst the coverage universe, Maruti and Apollo Tyres will show the maximum earnings growth, but that is primarily on the low base of FY12. But if you look at the overall 15 companies which we are tracking, Eicher Motors, Bharat Forge look as outperformers in terms of the quality of earnings, because they don't really have that FY12 low base, and they are expected to outperform going forward.